Hello viewers, you are most welcome to Asian Public TV's weekly MoneyWise program. Keeping the objective of achieving the medium-term target for consumer price index inflation of 4% within a band of plus minus 2% while supporting growth, the Monetary Policy Committee of Reserve Bank of India at its meeting today decided to keep the policy repo rate under the liquidity adjustment facility unchanged at 6.50%. Consequently, the standing deposit facility rate remains unchanged at 6.25% and the marginal standing facility rate and the bank rate at 6.75%. RBI's Monetary Policy Committee also decided to remain focused on withdrawal of accommodation to ensure that inflation progressively aligns to the target while supporting growth. In terms of outlook, RBI is of the view that the global growth is likely to remain steady in 2024 after a surprisingly resilient performance in a turbulent year gone by. Inflation is edging down from multi-decade highs with intermittent upticks. Financial market sentiments have been fluctuating with changing views about an early pivot by central banks in advanced economies. The likelihood of lower interest rates has spurred rallies in the equity markets, although uncertainty about the timing of interest rate reduction is reflected in bidirectional movements in the US dollar and sovereign bonds yields. Emerging market economies are facing currency fluctuations amidst volatile capital flows. From its October 2023 trough of 4.9%, the consumer price index inflation increased successively in the next 2 months to 5.7% by December. In terms of food inflation, primarily year-on-year basis, the vegetable price increases they drove the pickup in headline inflation, even as deflation in fuel deepened. Core inflation softened to 4-year low of 3.8% in December. Domestic economic activity is strengthening. As per the first advance estimates, the real gross domestic product is expected to grow by 7.3% year on year in 2023-24, underpinned by strong investment activity. In October 2018, the Reserve Bank had put in place a regulatory framework for electronic trading platforms for executing transactions in financial instruments regulated by it. Under the framework, which aimed to ensure fair access through transparent, safe and efficient trading processes, robust trading infrastructures and prevent market abuse, 13 ETPs operated by 5 operators have since been authorized. Over the last few years, there has been increased integration of the onshore forex market with offshore markets, notable developments in the technology landscape and an increase in product diversity. Now let's focus on hedging of gold price risk in the over-the-counter market in the International Financial Services Center, that is IFSC. With a view to providing flexibility to resident entities to hedge their exposures to gold price risk efficiently, resident entities were permitted in December 2022 to access recognized exchanges in the International Financial Services Center. It has now been decided to also allow them to hedge the price of gold in the over-the-counter segment in the IFSC. Here's a word on key fact statement for retail and MSME loans and advances. The Reserve Bank has announced several measures in the recent past to foster greater transparency and disclosure by the regulated entities in pricing of loans and other charges levied on the customers. One such measure is the requirement for lenders to provide their borrowers a key fact statement containing the key information regarding a loan agreement, including all-in cost of the loan in simple and easy to understand format. Currently, KFS is specifically mandated in respect of loans by scheduled commercial banks to individual borrowers, digit lending by REs and microfinance loans, Now it has been decided to mandate all REs to provide the key fact statement to the borrowers for all retail and MSME loans. Now, here's a word on principle-based framework for authentication of digital payment transactions. Over the years, the Reserve Bank has prioritized security of digital payments, in particular the requirement of additional factor of authentication, that is AFA. Though RBI has not prescribed any particular AFA, the payments ecosystem has largely adopted SMS-based one-time password. With innovations in technology, alternative authentication mechanisms have emerged in recent years. And that's all for MoneyWise this week. Thank you.